Hey, what's going on? The stock market is down over 5% in 2 weeks. What's going on over here? Let's talk about that. Welcome to myfinancesteacher.org. As you see, on the 14th of September, I made a post on my website describing these three scenarios for the general stock market. Around a week ago, I mentioned that there was around a 40% chance that the stock market was going to drop into the intermediate cycle low, where the intermediate cycle so far has been going on for perhaps 200 days. Perhaps it's going to continue for another few days. We will have to see about that. This scenario is represented by this black line over here. And I mentioned that there was a 40% chance of this scenario. Another 40% chance was allocated to this green line scenario, where the intermediate cycle in the general stock market continues, where this recent drop would be only a temporary decline into the short-term daily cycle low, giving us one more short-term daily cycle low before the drop into the intermediate cycle. And as I mentioned to the members at myfinancesteacher.org, on the 14th of September, there was perhaps a small chance, I gave it 20% chance, that the stock market is just going to keep pushing higher for that explosive move that I've been talking about on my website for a few months already. That scenario of continued push higher into the explosive move sometime this year was not very likely, with a 20% chance allocated to that scenario, but perhaps sometime in the next year, 2022, I do expect the stock markets to finally give us some sort of a bubble top, because they're already quite bubblicious, similar to what was happening in late 1990s. So to be honest, I've been looking forward to get back into the general stock market before that explosive move to the upside. Together with the members, we took advantage of this rally into the younger part of this ongoing intermediate cycle. And as I always make my trades transparent to the members over here in the model portfolio, I got out of my QQQ and SPY positions near the later stage of this intermediate cycle, waiting for some sort of a correction. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Looks like the correction is happening right now. The intermediate cycle is about to finish. Perhaps it finished with the low yesterday. We'll have to see what happens when the US markets open today. There is also a chance that the decline continues for another few days, perhaps into that support zone somewhere around 42.50. There are several factors for why I think that could be a relatively strong support zone. For one, there are several recent highs and lows around that number of 42.50 on the S&P 500. We see this early May high, mid-June high, and the mid-July low, all bouncing around the 42.50. And if you throw in these Fibonacci retracement numbers on all of this intermediate cycle, you'll see that the 38% retracement is also somewhere around that number of 42.50. Talking about the Fibonacci retracements, as I've mentioned many times in my older videos, the most common retracements are the 38.2, 50%, and 62% retracements. So the first of those common ones, 38% retracement, is another factor pointing out to that support zone around 42.50 on the S&P 500. Zooming out a little bit, we'll also see that this 14-week RSI is now lower than it used to be at a couple of previous intermediate cycle lows. The previous intermediate cycle low was over here in March this year, where 14-day RSI was higher than where we are right now. So the correction is already severe enough for a relatively modest intermediate cycle decline. And the intermediate cycle low before that was in October last year, where again the 14-week RSI didn't even actually come as low as it has right now. So the correction that we are observing right now is already more or less enough for an intermediate cycle low. Although on the other hand, you don't really want to catch a falling knife over here, so you got to be careful with when exactly you jump back into the markets. Now, another intermediate cycle, an even earlier one, was back in March 2020, and yeah, then of course the 14-day RSI did go much deeper than where we are right now, but that was a relatively unusual event with the pandemic hitting the world. Right now, I think the cycle low is perhaps coming up relatively soon. Next, let's have a look at this optimism index in the general stock market. And historically, usually when the optimism index is relatively low, somewhere around this dotted line, somewhere around the level of 30, that indicates that generally the proverbial this kind of a blood is on the streets, and it's perhaps a good idea to get into some positions in the general stock market when everybody is really pessimistic. But more recently, with trillions and trillions and trillions and trillions more of those dollars being printed, the general stock market just chugs higher and higher and higher without significant corrections, without letting the market get too much pessimistic. So the previous two intermediate cycles, as you see indicated with these red circles, didn't actually drop optimism level anywhere close to the traders being pessimistic, being scared. But as you see, what's happening right now is we do have some fear on the market going on. So sometime soon, once we see some sort of a turnaround, is when I'm going to get back into sizable positions in the general stock market. Next, let's have a look at this CNN Fear and Greed Index as of 22nd of September, before the US markets have opened. And as you see, it's already at extreme fear at 23. And looking at history back to 2018, usually this CNN Fear and Greed Index bottoms somewhere around this level of 20. So we are pretty close to what usually is a nice buying opportunity in the general stock market. Although, of course, sometimes the drops are really scary, as over here in early 2020 with the pandemic hitting the world. So outside of those rare massacres, usually when fear is somewhere around 20, that's when you usually want to start thinking about getting your positions. And looking at 1 week ago, the markets were already somewhat fearful a week ago with the CNN Fear and Greed Index at 31. It came down as low as 21 on Monday, and it closed at 23 already on Wednesday. So things are perhaps getting ready to turn around relatively soon. And by the way, remember, today we are going to have a FOMC meeting. And with this correction in the general stock market over the last couple of weeks, perhaps the Fed would be reluctant to push this talk of a taper too strong on the markets. So either over the next few days or perhaps even today, the markets might be getting ready to turn back up into the new intermediate cycle rally. And looking at the futures, we see that futures are already perhaps turning around. They are green, although the percentage change is more or less negligible. So in summary, an amazing opportunity is coming up on the general stock market, but there are risks of catching a falling knife. So for more details on what exactly I'm going to do with my trades, consider joining us at myfinancesteacher.org. Just click this register button. The first month is only $5 and it's $10 per month after that. For now though, let's get a bit comfortable for the upcoming Fed announcement. Good luck in your trades.